Let's get across some of the commodity price action overnight. It was pretty choppy, actually. Pete McGuire joins us from BAXTER-FX. Pete, good morning to you.
Good morning, Brooke. Good morning, Carson.
How are you kind of reading it? We're just still scratching our heads trying to gauge market reaction to everything going on in Europe. It's crazy that markets respond so drastically to a comment from a former Prime Minister of Greece saying that they're drawing up contingency plans. Why the jumping?
Oh, there's just so much uneasiness, and I think the reality is, yes, we could let go of Greece, but the unfortunate side is that it's just going to cost so much to let go of them. And what was interesting overnight was that there's an auction tomorrow for €5 billion by the German Bundesbank, which is a central bank, with a zero, first time ever, a zero coupon rate for a 2-year bond. So in other words, there is no return on it. You are guaranteed to get your money back, but that's the only thing that you'll be getting back.
As Carson's call, you always call that, don't lose me money.
Exactly.
Don't lose me money.
It's capital preservation.
Yep.
Exactly.
No wonder that the profits aren't flowing. You're looking at a really interesting indicator, more broadly though, at this moment in time, just to talk about big picture demand. And as the Baltic dry, let's bring up a chart and just walk us through a trend that you're detecting on this one.
Yeah, that for the viewers, that peaked at around about 12,000, if my memory serves me correct. And then you can see that I'm talking about 07, 08, 09, 07 and 08. And then it crashed to around about 600. We saw that going back to the latter part of last year, early part of this year, and now it's back at about 1,100. It was totally oversold. But that just gives you an idea. The Baltic Dry Freight Index is a shipping index as far as movement of containers and export goods coming from that region as far as Europe and being shipped across the world. And what we've seen is huge demand for new ships as far as oil and, of course, cargo container ships in that 08 or 07, 08 lead-up, and now you've got a huge amount of ships that aren't being used, and that's going to even impact further as far as Iran, because we've got those sanctions coming into place on the 1st of July, which is going to have an impact as far as export out of the out of Iran.
The impact being what? We're going to see it crumbling even lower.
Well, I wouldn't be surprised that it'll probably hold around this level. I wouldn't, even go sub 1,000, but they're just further impacts to a delicate and fragile global economy.
Is that a useful indicator, the Baltic Dry Index? In recent years, it seems people have questioned,
I think it's still something to look at, Brooke. It gives someone an indication as far as what's going on as far as shipping costs, and shipping is very much the that hasn't changed for really 500 or 600 years, is the main transportation, well, allowing for any form of transportation across the world. Everything needs to go in a container somewhere.
Just detail what you were saying about the Iran sanctions. So this is the ban on Iranian oil shipments that Europe's basically announced. That actually comes into effect, and the US comes into effect within weeks?
1st of July.
And what are the implications of that?
Well, first off, the first part before we get to that is that there's a meeting tomorrow in Baghdad between Euro and US and Iran as far as the International Atomic Energy Agency, and if as far as uranium enrichment and what's going on there in Iran. So these negotiations are going to be very interesting over the next couple of weeks, and to see what's going on internally within Iran. And now it's really starting to cripple their economy, because they've gone from around about 2.3 million barrels a day as export. They're down to around about 1.7, and there's chances that they could even go sub 1.5 million barrels. So it's greatly impacting. Those sanctions are really working in Iran.
And yet we are still seeing WTI, we're still seeing NYMEX, Brent, everything's going one way.
US dollars increasing, our dollar's under 98. The first time in 6 months we're down under that 98, and I think it's every conceivable chance we'll see 93, 94 over the coming months. I'll go that far out, say 6 to 12 weeks. And WTI, West Texas Intermediate, Carson, you're correct, is now under $92 a barrel, and that's certainly looking, in the 80s territory.
So when does the Chinese outage, given that these Iranian exports would be flowing China's way, which is meant to be buttressing the price, when do we see that reflected? When do we actually see the price start to head the other way?
Well, you've got other impacts as far as we move in from a geopolitical, but then you look at the fundamentals this time of year traditionally increasing driving season in the Northern Hemisphere, and of course Mother Nature, that wild card out there as far as hurricanes. So it's, the next couple of weeks or months are going to be very interesting across the whole crude complex.
And alongside that, the Australian dollar obviously below 98 cents this morning. You say it's headed where?
Our people, we reckon, 93, 95 cent range over the next 6 to 12 weeks, Brooke. I can't see our, and I'll even go one step further. I think there'll be another 50 basis point cut to our interest rate by the RBA within the next, it could be as far out as 3 months, but it'll certainly be there.
Just a brief final thought, Jeremy Siegel from Wharton talking about devaluing the euro. This is being inevitable, just strains of Lehman's and intervention here?
Well, that's right. I mean, when you think of what went on as far as the US, and they bailed them out, of course, in 2008, the euro or the eurozone, the ECB will have to do the same. We're worrying about the run on banks as far as Greece, Portugal, Spain and Italy, and if people are saying, well, look, I can't trust those banks, that's why Germany is going the other side and saying, look, we'll give you at least capital preservation.
0%.
There's no, at 0%. So it's very, very interesting. This is a very, very delicate situation.
Pete, come back next week. We'll see how it develops.
Thank you, Carson. Thank you.
Thank you. Thanks, Pete McGuire.
FX.